Now, I want to point out to you a really decent technical pattern that's particularly good for stocks, and that's due to stocks gapping at the open, and that gapping formation can really lead to situations where sellers or buyers really get trapped, and that's part of the power for this morning star pattern because it's a really decent technical reversal three candlestick pattern. I just want to point it out to you. It's worth just looking out for. What you need to see, this is the to technical. So obviously you'd want a market that you're looking to buy into. So here's an example. You got Tesla. You got a downtrend, and what you need in the down, you need a candle that is bearish, and then the second candle, you want it to show a small indecision bar. So it can be something like this, just a small bar showing indecision. But you see how it's gapped well below the prior day's close. Now, if you think about that, what's that telling you? That's telling you that there's strong bearish sentiment in the market, so much so that the market's gap lower. And what do investors think? Oh, great! We're going to be we're making new lows. Sellers, are really feeling confident at this point. Great, we've got new lows, and then you can see price has moved up a little bit higher. Now, for the pattern to be valid, that candlestick cannot close within the body of the previous day candlestick. It needs to sort of be out there. Now, if the wick goes within the body, that's fine, but the actual close of the body has to be below the previous day candle. And then day three, this is the crucial day, that has to be a bullish close above the 50% mark on this candlestick. So you see that 50% candlestick mark? As long as that third candle closes above that 50% mark, then that's the pattern complete. And that's called the morning star pattern. And it gets its name from Mercury, which is the morning star that appears very early and very low in the horizon, just kind of after, sunrise. You can, sometimes see that Mercury morning star. So that's the name. That's where you get it. You're very, very, very rarely going to see this in FX markets because they're sort of open 24 hours a day, 5 days a week. But they are much more common in stock markets. So definitely a pattern to look for. So you're looking for a downtrend, bearish candle, indecision bar that's isolated away. The wick can go within the previous day's candle range, but the body must close outside the previous bottle, then the third day above the 50% range, and then that typically will signal reversals and can be a very helpful reversal three bar pattern to note.